Hey YouTube, it's Dimitri, and today we're going to talk about gold and silver, and more specifically what I'm buying, why I'm buying it, and kind of give you an inkling what's going on here. So I'm not a huge proponent of timing markets, as most of you like to do, but we're going to talk a little bit about what I'm doing, why I'm doing it. Just to start off with here, I'm somewhat concerned with the global economy as a whole. So when you look at global markets, right, there's been a crisis kind of looming, it's been coming. Then COVID hit in the beginning of 2020. People are kind of freaking out. The US government just starts basically turning on the money presses, issuing stimuluses, giving money that they don't have to all these people in the United States, trying to essentially hold up this asset bubble that we've got going, right? This economic bubble that's sitting here, it's about to burst. I've been saving cash since 2018, waiting for this to pop. It's coming. Okay, I'm confident it's coming. When exactly it'll come, we'll have to wait and see. But again, when you end up taking fiat currency, so US dollars or government currencies in general that are not backed by a physical asset, they can just print money whenever they feel like it. What does that mean economically? Well, when you print dollars and the supply of that money, so say US dollars increases, what ends up happening is now all of your items become less valuable. So if you had something like a highlighter and it was $1, if you printed money and you doubled the money supply, theoretically this would become worth $2, right? You would think, oh, it's going up in value, right? That's what happens with the stock market as well. When you print money, those stocks raise in US dollar valuations. But realistically, all those dollars that you're holding on to, all those dollars in your savings accounts, they become worthless, right? It becomes half. So if you walked into a store and paid $1 today, you could buy this. Let's say they print double the money overnight. You go in tomorrow. Now you need $2 to print this. So your dollar goes a lot less. Like you can't buy as much with the same dollar. That's what inflation is here. Again, the Fed, so the Federal Reserve of the United States, rates are near zero, negative rates. We're not in a good position. They can't lower rates anymore to essentially manipulate the markets. I'm a libertarian and an Austrian economist. I do not believe in manipulating markets. So the fact that this is going to blow up is pretty, I guess, self-revealing. This happens over and over and over again. Government intervention, expert economists making decisions for governments and trying to manipulate the money supply is just a huge joke in general. But anyway, so let's just dive on into here to gold. I'm a big fan of gold in general. I think gold's better than silver. The main reasons for this is that gold is mainly used for a storage of value. Okay, it's not used a lot in manufacturing. Silver, on the other hand, again, another precious metal, something else I also invest in, something else to buy. But again, it holds value like gold, but it's also used in manufacturing. And the reason why I'm not super pro on silver as much as I am on gold is because if silver is used in manufacturing, there's going to be a demand that's created by manufacturers buying silver. So when they buy the silver, right, they're going to be demanding it. When the economy tanks, people aren't buying electronics, which is what silver gets put into for manufacturing, then the demand's going to go down. And so the price is going to go down with it unless we see some other factors kind of pushing it. Now, gold, on the other hand, is running. I think gold is somewhat pulling silver with it because people are starting to realize as they're printing money, your dollar's not worth very much. So I could essentially buy gold or silver today, hold it, and then later when I want to spend the actual US dollars or buy something of I don't know, of retirement, vacations, leisure, I don't know, a new house, a car, food, whatever you need, you could sell that at a later date. So in the example of the highlighter here, let's say you bought, I don't know, we'll say 1 ounce of silver today, and let's say in a few, I don't know, tomorrow, right, it could be worth around 1 ounce of silver, just in general, but again, it's going to hold its value fairly well. With prices rising, though, this would actually cost less tomorrow. With the dollar example, when they keep printing it, so the supply is increasing too fast, what ends up happening is now this is worth $2, so now you have to have more money to get what you need. It's just a good value in general to buy gold and silver. Again, it's not a guaranteed you buy it, it goes up in value, but I'm going to be buying my gold and silver, and I use this as a hedge. So let's talk about hedging a little bit. So when the stock market goes up, gold prices typically go down. When the stock market goes down, gold prices typically go up. So essentially you have an offset effect here. Why this is important is because I'm planning on buying and holding, and I plan on essentially hoarding and buying tons of gold and silver here from now on out, right? I've just gotten into the game a little late here. But what ends up happening is, let's say you have, I don't know, $1 million in stocks, for example, in your retirement account, and the market's doing great, it's booming, you retire, it's still great for a few more years, right? You can use that capital, you can sell off these stocks at a really high price, and it's great and wonderful. When the market tanks, though, and you're still retired, right, all of a sudden those assets that were worth, let's say, $1 million at the beginning might only be worth, I don't know, $750,000 or $500,000. It's tanked 25 to 50%. Now when you sell off those same stocks, you're going to get a lot less bang for your buck for retirement. So what that means on the gold and silver piece, right, is if gold, specifically here, moves in the opposite direction, if you had, let's say, a portion of gold and a big portion of stock, when the stock market tanks, you have gold that you can sell off during that crisis. The reason you'd prefer to sell gold is because gold will be more valuable. If stocks go down, right, the gold prices will go up. You can get more dollars back to live on during retirement. When the market recovers, then what you do is you switch from selling gold back into selling your stocks and your equities and your bonds and your different portfolios here that are market related so that you can retire and live more comfortably. All right, so what am I buying? I'm just going to talk about this briefly. I'll link some stuff below as well. Peter Schiff talks a lot about gold and silver. He's a big proponent, big investor as well. I like a lot of what he says. I don't agree with everything he talks about, but he has some really good points. Let's just go on here to APMEX. This is typically where I buy my gold and silver. JM Bullion's another place. So let me just break this down for you really quick. The spot price for any precious metal is the price of that actual metal raw. Okay, that's what they mine gold, they mine silver, that's the spot price. So on APMEX here, you can see gold is selling for $2,025. This is per ounce raw gold. If you need to create a coin out of this, for example, or a bar, you actually have to take this and melt it down and create that design. To create that design, though, it costs money because you have labor that goes into melting it down, putting it through the presses, creating the coins, right, pouring it into the forms if you're going to do bars, for example. So it requires more cost to it. There's a company that has to go in and do that. They have a small profit. So you will always pay more than spot when you buy gold and silver. Just letting you know that up front. Right now you can see the gold is at 2025. So let's look at this chart real quick. Right, it's got a good spike here in August. I bought it a few weeks back, so we're sitting pretty good. And then if we look at silver here, again, we see another massive run. But again, I think prices are going to continue to rise for some time. I'm not planning on selling mine anytime soon. So if it hit, I don't know, gold hit $4,000, $5,000, which would be, I think, crazy in my opinion. The market crashes. It's very likely, though. I'm not going to sell it. I'm going to hold it. So it's a long-term investment for me. But let's just talk about what I buy, why I buy it. In general, I typically, for silver here, so let's talk about silver first. I usually buy US minted coins. So I buy these Silver Eagle here. You can see here, it doesn't really matter the years. I'm just looking to buy silver dollars in general from the US Mint. I live in the US, so the demand will be pretty good here. That's why I'm buying silver from the US. If you live in another country, I typically recommend you just purchase what your country's producing. It's a good kind of like, I don't know, a measure that everyone around you is probably going to be buying the same thing. Again, the American Silver Eagle, that was probably the most sold and bought, so it's the most liquid silver asset out there. I like that because if there was an emergency and I needed to sell it, I'm not having to find a buyer for that. And what I mean by this is there are some crazy things in here, which I don't know if I can find them. You can buy like gold pirate skulls and you can buy all kinds of different things. Again, those would be really hard to liquidate if you needed to. So for example, in retirement. So I don't recommend that. So I'm mainly buying American Silver Eagles, but they have a higher premium because that is the liquidity premium, right? Everyone wants to buy and sell American Silver Eagles. It's a good thing because it's very liquid, but at the same time, you're going to pay more for it. And I'll pull up just to show you here. So one silver American any year here is going to be $41.41, which is absolutely crazy because I just paid, I think, like $30 for these a few weeks ago. The other silver dollars that I do like are going to be the Royal Canadian Mint silver maples. So silver maples I think are pretty cool. Again, Canada's pretty close to the United States. I trust Canada. People have complained there's what's called milk spots on these coins, meaning that they essentially have like a little white spot that develops on them. I don't really care, to be honest with you. I'm not a collector. I am just purchasing these solely for an investment purchase. But again, here you can see this is 1 ounce of silver, same purity. It's $39.49. Those American Eagles are going to be $41.41. There is the liquidity premium between the two. So because the American Eagles are more liquid, people are willing to pay a bit more. The premium is what they call it, is more. Canadian silver, though, is going to be less. I'll just mention a few other kind of cool products here. The Philharmonics, which is from, I believe, Austria, those are pretty good. And there's some other things out there. South Africa, I believe, has another good one as well. And Libertads from Mexico are also fairly good, but I do not own any of that. And then let's just dive into gold, my little 2 cents on this. So the U.S. Mint creates American Gold Eagles, and they produce American Gold Buffalo coins. I don't like the American Gold Eagles. They are 99.5%, I believe, or 99.95%. So they're not as high of content of pure gold. The American Gold Buffalo coins here. So we'll look at these real quick. Let's pull up the other one. Okay, so here's the American Gold Eagle. Again, it is 99.95, I believe. See if it says it down here in the description. Yeah, so here's like the purity. It's 0.9167. If you look here at the Buffalo, it's 0.9999. So it is much purer, and so you get more gold for it. Now let's look at the prices of this. The Gold Buffalo here is $2,157.49 as of today. And the Gold Liberty is $2,157.49. So it's the same price, but you get less gold. Again, there's a slight liquidity premium. Personally, I've grown up with the Buffalo had nickels. So for me, there's some sentimental value as well. This is where I'm at. If you want to get into more of an investment, though, as well, I've been buying bars of gold and silver. If you look at silver, so I guess I've only been buying bars of silver. Bars of gold are fairly expensive in general. All right, so if you go into bars of silver real quick here, there's not a lot of branding with the bars. Credit Suisse is one of them. You can look, there's a variety of different products. So I like buying through APMEX, which is the American Precious Metals Exchange. So I like to buy their branding for the most part, but I also bought some bars from a few different places, which we'll go through here. So buying APMEX bars I buy everything through them. I store my gold and silver through their facilities, through Brinks. So high security, you pay $15 a month for that and a 0.55% fee as of right now to store it. But again, for me, it's not that big of a deal. I believe it's going to go up in value more than that, so it doesn't really make that big of a difference. I did buy some APMEX cast poured silver bars here at 10 ounces. So silver is cheaper per ounce. Most people can afford it. Again, if you want to go through the gold route, though, and you're like, Dimitri, I just can't afford $2,000 for a coin, they have smaller coins in gold. All right, so if you look around, though, you'll see online there's like 1/10 of an ounce, 1/4 of an ounce, for example, in gold. You can buy other smaller pieces of gold that, again, would have good value for gold, a good investment. But again, you don't have to pay that $2,000. Gold, though, for me, has more of a value just because it has more of a hedge than silver does, so that's why I bought it. But anyways, I hope you guys enjoyed this video. It's a little different. I'm sorry the lighting is pretty terrible tonight. It's 8:30 at night here. I'm trying to shoot this video as gold and silver prices are bouncing all over the place, and it's going to take me a few days to get this video edited. So anyways, thanks for watching. Don't forget to like, share, and subscribe, and as always, until next time.